What's good, team? Welcome back to a new video. And today we're going to be talking about dynamic sizing. But first, keep this new camera quality, right? Wait, watch this. So if you're using 1% risk or whatever on your accounts, you're already a big step behind. And the reason is because every setup is different, every day is different, every trade is different, and everything is different. The market is ever adapting, right? So what you need to do is adapt with it. So I'll get into it, but basically the whole point of the video is to teach you guys how to size more sometimes, size less, add on to your winners, maybe cut back your losers a little earlier, and we'll see how this goes. You guys need to frame the mindset because smart traders adjust their positions, whereas others guess, right? So you want to execute with a little bit reduced risk, definitely on Mondays because the market is still forming bias. The higher time frame can flip, and entries often fail. Deliveries pretty much always bad, and yeah, I would definitely suggest Mondays to size less. Friday PM is terrible. There's no volume. The setups are weird. You either take your profits before Friday PM or you stay flat, right? You don't want to trade that. If you come in and it's choppy, no displacement, weak drawn liquidity, too much indecision, that's probably one where you want to step out. But if you end up see a setup or something that seems decent, definitely might want to de-risk there. News days like CPI and FOMC. The day before is usually choppy, so it falls into the category before. And that very day, what I do often is I enter a half size entry and then I add on to my if the trade is going my way. So I can enter half size, and if the trade is going well, I can enter another half, or I can enter even a 3/4 of my normal size, making it a bit bigger as well. Because the spreads they spike, there's traps everywhere, there's liquidity sweeps left and right. But if the setup's good, the setup's good, right? If it follows your rule, it follows your rules. And also speculative entries, which is where you kind of like you get like a first step entry before a real confirmation. When that happens, I usually enter half risk. So that's like those turtle soup entries and all that shit. If you guys are any question about that, you guys can hit me up. But basically, it's like after a liquidity sweep, you kind of maybe like after a higher time frame PD array or like an important level gets hit, you enter into a turtle soup trade, which is when you enter as the candle closes below the sweep. And after you can get your engulfing or you can get your brick of structure, return to fair value gap, whatever, and then you can enter another trade there, right? You want to use full risk when your model is complete, right? Everything you trade, whether it's power of three, kind of like me, AMD, silver bullet, whatever you guys trade, brick of structure, and whatever it is, right? Draw liquidity, sweep, clean setup, whatever. Your bias is clear from the higher time frame. The time of day aligns. You've seen this exact setup play out before. You can enter your normal entry, and then if price reverse back, like let's say you're in a short and price reverse back into premium in fair value gap gives you a reaction, why wouldn't you enter another position there with the stop loss where it should go on that separate trade? So you're in two different trades at the same time, TPs at the same exact place, and you let that shit play out, right? So how to add into your winners? What you want to do is you want to add only after price breaks structure in your favor, right? You never want to add into drawdown. This is not good. I used to do that when I first started. I can make a whole video on this. This shit's bad as fuck. You never want to add when you're into drawdown, okay? You can use your FVGs. You can enter, let's say, you can enter the inverse fair value gap on a power of three setup. So, wait, let me show you what it would look like. So, let's say you're on the charts, right? And oh shit. And you get a accumulation. I'm going to do it very quickly. Manipulation, distribution, right? So, let's say this is what you're trading here. And your market is kind of doing this. You get your sweep of the lows, right? Your manipulation here. You manipulate through that, and then after that, you have your first TP here, second TP here, whatever, third TP right here, right? So market does this, and then it pulls back into you. So you get an inversion fair value gap here. You enter long, targeting the high, saw below the low, or below the inversion, whatever. I like to go below the low, right? And then after you get a pullback right here into another fair value gap that was created on this leg with the breaker block that's here. Nice unicorn entry. You can enter another trade or add size to your existing trade right there with the stop here. And at this point in time, once you get the rejection from this, the stop from this trade should be at the exact same place as this one. So both of your stops are sitting here. So one's in profit and one's in drawdown, right? Or one's in where it should go. All right, imagine here you're targeting this level of buy side that I marked out here. right? You get a big move down, whatever. End up reacting off this fair value gap here, manipulation, accumulation, manipulation, distribution. Enter off the inverse right here, targeting this level here. Stop at the low. I like to put at the low, even if the R is a little bit worse. End up missing your TP by a bit, comes back down with big bearish move, right? You end up either entering off this fair value gap here, that's fine. But the real thing is that you have your move up, the breaker is here, the fair value gap that equates to it is here. You enter off the retap of this. This is a whole thing. I can make a whole video on this. And then just like this, another 1 to 2, and then bang. And by that point, once you make this low here and you go high, your stop of this should be below here. So you have one stop here in profit and another trade right here. End up hitting both TPs, right? Keep in mind, guys, I'm going over the setups very quickly because I don't want to cloud you guys with a bunch of different words and a bunch of different strategies and make you guys doubt yourselves. You guys have a strategy, stick to it. If you don't, go watch my strategy videos, learn those strategies, and then apply the concepts I'm teaching right here to the other videos. I don't want to be spouting out some whatever I look for, whatever the trade is all about when you guys don't trade like that, because that will confuse you. I know, I've been there, right? I don't want it's the same thing when you guys are scrolling on TikTok or whatever and you see a strategy, don't watch that video. This is only going to confuse you. Okay? Stick to what you know, backtest it, and everything will be fine. Basically, what I'm trying to say is don't stack your trades too aggressively either. Just compound on strength, right? Just compound if it looks like it's going really well. You guys are seeing new entries, new whatever, right? Let's say you enter off a 5-minute power of 3, you end up getting to move up, and then you see a 1-minute power of 3 halfway through your trade. It would make sense to enter it. You guys need to also keep in mind a personalized risk profile, which that means is what makes you go on tilt. Does it make you go on tilt to enter another trade? If it does, then don't do it. Does it make you go on tilt to get stopped out BE? Does it make what makes you tilt? And whatever that is, take it out. Don't do it. That simple. Even if it sounds good on paper, don't do it. When do you start revenge trading or taking prove it trades? Right? That's the I can do this trades. Don't do those either. This is not what this is about. We're talking about clean setups and how you guys want to add on to your winners if they are winning. You need to build your risk plan around your mental weakness, okay? Not just the probabilities of the trade. If you guys are subjective or like if you guys are subjective to certain things to make you go on tilt or make you blow account, make you overtrade, whatever, don't do it, right? Don't do it. There's no point. Look at your journal, see what makes you tilt, and don't do it. One good example of this is you can also write in your rules that you can only allow one high risk trade, which is one trade where you add on to your winner per week, so that this way you don't start going crazy with that and try to add on to your losers as well, right? You guys can make rules like this to follow your trading plan. Everything else you can go for 0.5%, 1%, or less, whatever. Again, guys, it's not about being aggressive. It's about being smart here, okay? Your job is capital preservation first. Profits are second, but if you want to go fast, you also need to lose slow, right? That being said, adding on to your winners is a very good thing to do, especially if you have your right mindset and the right risk management for it, and I highly recommend doing it. Other than that, guys, don't forget to like, comment, subscribe. Hit me up if you guys have any questions. You guys can join the free Discord as well. Free trading journal and ebook in there. Just chilling, free waiting for you guys. Other than that, TikTok, Instagram, I already said it pretty much. I love you guys. 200 subs, that's crazy. Brand new camera. Follow me around. Watch it. Oh, and again. Oh, brand new mic, brand new camera, brand new team. Let's get it.